back to me. And as I said earlier when we started, I would go through some bits on volatility for you with regard to the forex market, and also look at some of the indicators that we have developed for, well, you can, they're for forex, but also specifically for forex, but also can be used in other markets as well. And I'm actually going to use the Euro CAD because it's just been a fantastic example. Firstly, it's confirmed what I'm about to tell you about pairs in terms of the volatility. It's confirmed Wyckoff's second law. We've had a brilliant reversal, bang on a cue at the time that we would expect this pair to reverse, and it's also the best day to trade this pair. But let's start at the beginning. I said earlier on that when you, well, as forex traders, one thing you have to get to know is you have to get to know the currencies, individual currencies, and currency pairs. In other words, their characteristics, who the central banks are, etc., etc. In our forex program, all of this is explained. There's the huge module on technical analysis, there's a fundamental analysis module, there's a module on related markets, because all the markets are interrelate and bounce off each other. There's one on the mechanics of trading, and there's also a part in there which actually explains how you can work this stuff out for yourself, what we call the volatility coefficient. The volatility coefficient also helps you determine what your trade size is. This is something that is all in the program. Right, Euro Canadian. Why the Euro Canadian? First of all, let's go to the CSI and let's see what's happening with the actually individual currency pairs at the moment. This is part of what we call our dashboard, and each of these lines represents an individual currency. And the CSI tells us when a currency is either oversold or reaching overbought, as we can see here with the US dollar. And this morning there was just this amazing move on the Euro Canadian. The Canadian is the purple line, and the orange line, the gold line, is here in the euro. It's the euro fell very heavily. In fact, I have a screenshot of all the euro pairs this morning. Where are we? This is the dashboard this morning, as we can see here. This is from this is actually part of a post that I did on my forex trading page. And in fact, all the euro pairs have all been selling off really, really heavily. And in fact, it was the Euro CAD that I was particularly interested in. And it was clear on the hourly chart that having fallen so far, the likelihood is there was going to be a reversal. Now, it doesn't always happen with a pair that moves strongly in the London session that you are going to get a reversal in the US session. It doesn't always happen, but in this case, for the Euro CAD, it did, and it's partly because of the profile of the currency itself. And if I could bring your attention here to this site, which is investing.com. And what you can do is you can look, this is over 10 weeks, which is fine. You can make it longer, but 10 weeks is enough for what we need. Basically, you have all the, most of the pairs, and you've got the gold and silver on CFDs as well. And you highlight the pair that you're interested in, and it basically tells you what the daily volatility, and volatility we mean here is what is the range, what is the amount of pips that it's been doing. And what's interesting about the EuroCAD is you can see here they've had days when there have been really big ranges in this particular pair. This is over 3 months. You can have it over 1 month, you can see it over 3 months, and you can see it over 6 months, or even you can go over 12 months and see what has happened. And this is really, really useful, because if you are, first of all, if you are either looking for a trading opportunity and you might spot something on a chart, it's always worth looking to see, well, I can see this opportunity, but an opportunity on a chart, it may look a good opportunity, but actually if the pair is, it's not terribly volatile in terms of range, then, maybe you should look for something else. And more importantly, if the EuroCAD is part of your portfolio, it's, you know, you like to trade 4 or 5 pairs, of which EuroCAD is one. This is the kind of data that you really must keep a track on. Similarly, if you're trading a stock, you would keep track of any earnings, you would keep track of insider dealings, you would keep track of the beta. There's all sorts of things that you really have to get to know, because just because we're traders and we're in and out on a daily basis, or maybe, you know, 1 or 2 days, or even you're in and out on even, you know, seconds or minutes, really have to get to know the instrument that you are trading. So an interesting thing about EuroCAD is we can see it's had these big ranging days, but look, it has been falling. That doesn't mean there's not going to be trading opportunities, but obviously there's been more trading opportunities if something's been, you know, moving 200 pips over a 24-hour session. Then it tells you over the hour when things are likely to be moving. And what you'll find time and time again is you will find most pairs will move very strongly around the London Open, which is, well, you can take the Europe and London, which is 7, 8 o'clock. You will find an increase in volatility, more participation in the market. Then you've got 2 o'clock, which is the US Open, approximately. And often you'll also find is that the London Fix, which is the 1600 hours, and you really have to look at the different pairs, and that will tell you. And then it will tell you, well, what are the days when it tends to move the most? And Thursday, for whatever reason, you'll find a lot of them move quite nicely on a Thursday. So that's the kind of information that we look at in terms of, you know, volatility, in terms of how much the pair is likely to move. Now, getting back to the Euro Canadian, I'll just go back before I do that. So basically that was the screenshot. This is where we are at the moment. It's not looking terribly interesting at the moment because everything is bunched in the middle here. You know, things are sort of moving up and down, but look at the time. We know the times that there's more activity in this market, so we can almost sort of time the times that we want to be trading in forex, which is what I like about forex. It may be open 24 hours a day, but you can have a pretty good idea of when it's likely to be busy or not, and you can say, do you know what, I'm going to do the London session, maybe I'll come back for the fix, and you know, I can lead my life in between. I'm not actually glued to the screen all the time. So let's go back again. Now look at the EuroCAD. That's it. So, and also compare it. This is the daily chart for the Euro Canadian. And you can see here it has been in an almighty congestion phase. In fact, since the middle of March, it's been oscillating around the volume point of control. Some days have been big ranging days, as we can see these 2 big candles here, as we saw on the graph from investing.com. But boy, oh boy, there have been some very, very narrow days. What you're going to expect, who knows? Sometimes when it's in congestion, you can't really tell. You can look at the day before and you can see, well, there's been a lot of buying coming in, so maybe the price will go higher. There may be a news release that's going to affect the euro or the Canadian. That might push it further, add some momentum to the pair, because volatility is often was always accompanied with momentum. So, you know, it is going to move in some way or another. But this is what we've got today. Not a big candle, but it's still produced, you know, both a trade to the downside and to the upside. So let's look at the trade through the prism of the Renko chart, because this also tells us, it has its own little story to tell in terms of trend and volatility. This is the congestion phase. Let's go back to a time chart. This is the 10-minute chart. This is the congestion phase as we were coming into the London session. This timestamp here, 9:40, you have to take 2 hours off, because it's not like Ninja. It's not your actual time. This is either the MetaQuotes or the broker. I never know which, but all I know is I have to take 2 hours off. So I have this congestion phase. I know I'm in congestion on the daily chart, so you know it's not going anywhere. I've got the Camarilla indicator up on here. This is a very clean chart. I've just got my levels. And I can see here there have been repeated failures at what we call the R1, which is at 53.47. So given just based on price action, it's tried to rise. It keeps trying to rise. I look at the volume underneath the up candles. It's not terribly, exciting. It keeps hitting this level. So my expectation is that it is probably going to go to the downside rather than to the upside. Then we have these candles come in with a lot of volume underneath, but look at the wicks to the tops of the candles. So there's weakness coming into this pair at the moment. Now, moving to the Renko chart, this is the price action, and in fact I was worried that in fact this would disappear off to the left of the chart and I wouldn't be able to show you this. So this is the congestion that we've seen on the time chart, and what we're waiting, and we can see this choppiness in this congestion. It's not just congestion, it's choppy congestion, and we have this constant going in and out of the colors for the trend monitor, but then it takes off, and it takes off with momentum. It actually starts with a volatility candle. If we go back to the time chart here, we've got this candle here. There's obviously volatility comes in. I suspect that is probably London coming in. The price drops like a stone. It drives back up again. It's outside of the average true range, hits this resistance at the R1, which we know it's hit multiple times already. What happens is that we have a retrace to within the volatility candle, and then the trend takes off as London gets underway. This is the reflection on the Renko chart. Now look at that trend lower. You have a little pullback, but the momentum in that, we know there's momentum in this trend. First of all, because the bricks just come out one after another. There's an attempt to pull back, but it's quickly snuffed out, and then it hits this level here, which is this resistance at 52.70, and we did have quite a bit of congestion after that before the trend starts to move higher. This is also a good example of why prices always fall a lot quicker than they rise. They will fall very quickly when markets have to rise. It takes effort, it takes time, there's constant pullbacks. The monitor is still blue, but look at the number of times it's attempted to resume the primary trend lower that we had this morning. This move higher, the beginning of this move higher, actually coincided. It was just after the US Open. So what we had here, this is a 10-minute chart with my Camarilla levels, and also I have the CSI indicator at the bottom with just the two currencies. You can see here the move higher in the Canadian. As the euro was falling, the Canadian was rising. Then we had this little turn lower. We looked like it was going to reverse, but in fact it went into this consolidation phase before it finally took off. And look at the timestamp, 14:20, which is about 2:30. What's interesting, in the move lower, it actually chewed through all the Camarilla levels, the daily Camarilla levels. It went down to the S6. It tried to break below the S6, but went back to retest it. And what we do with these levels now, we then use them on the way back up. So they act as, if you like, targets, potential trade, objective for this particular pair. But what's happening now is the lines are now moving back in parallel. But we know from looking at our volatility chart over on investing.com is we are going to be entering a period of quiet, as we can see here, as the market moves, goes to the close, goes into Asia. What does it do in Asia at 1, 2 o'clock? Well, it doesn't really do very, very much, because neither the euro nor the Canadian is a local currency for that time zone. The Canadian is very much a currency of the time zone that we are trading at the moment. Now, these levels on this chart are going to be refreshed at rollover, but we have another set of levels for this pair, which are in play until the end of this week. We go to the hourly chart. What's interesting about the hourly chart is this. This is the move lower that we saw on the 10-minute chart. It actually looks like a V-shape recovery, because we had a two bar reversal bang on the R3, it's going back up. Well, where is it likely to go into? Well, it's going back to the R4, and the R4 actually is a confluence of that level that we saw on the 10-minute chart. And you can see here the number of times that it's tried to break away from the R4. The fourth level on this indicator, where be it the R4 or the S4, are probably the two most important levels, because it's where price is aiming for, and it's, if it breaks away, then it will retest it. But if it breaks away, it is often taken as a confirmed breakaway, as it were. But it doesn't mean you can't trade it on the way up to the R4. And if you're in a trade between the R3 and R4, you can almost bet your bottom dollar it is going to test it, it is going to pull back, probably retest it. And the more times it pulls back and retested, the chances are it ain't going to go through on this particular occasion. And if you're in a pair that is coming out of a period in the trading day when it just, traders lose interest in it, they don't care anymore, they've gone home, you'll just have to either you decide to close out and wait, and for the next time that the pair is going to be a little bit more lively. But what the hourly chart is also confirming is this congestion that we can see on the daily chart. So we've said this before, the daily chart gives you a perspective on what you can expect in terms of the type of price action that you can see in the faster time frames. You will get big days, big ranging days on in a congestion. Wyckoff's second law also says that the longer this market is in this congestion phase, when we get a breakaway, it is going to probably be the mother and father of all breakaways, because it's like a spring that's winding up. There's a lot of energy in there, pent up energy that's waiting to be released. So if you're a longer term, if you like to look at the daily charts and the longer and the slower time frame charts, you would have to wait. You would have to be patient. When you have a congestion phase like this, the longer it is, the more it's going to take off. The other great thing about congestion phases is you know automatically where your stop loss is going to be, because it's defined for you. Unlike maybe a reversal trade, and if we go back to a reversal trade that we had here on the 10-minute chart, let's have a look. There we are. We had this fall lower, and we can see it's gone beyond the S6. So we'd obviously go look at our higher time frame, at our 1 hour chart, and see if there's another level. You've got to be a little bit more. Your stop loss, you're not really, you kind of say, well, I think I'm going to put it here because it might get to this point or not get. With a congestion phase, it's there. I mean, the pivots tell you, the lines tell you, you know exactly where your stop loss is. It's kind of a bit of a no-brainer, I think. Do you agree with that, David? Yeah, that's it. So that's a look at the EuroCAD. In terms of the price action, let's look at the 3-minute chart. Where's that going? Well, I don't think it's going to go anywhere. It's the volume point of control has moved up to this level here, building yet another congestion phase. Probably going to wait now to see what happens in the London session. And you can do this exercise on all the pairs. I mean, being here in the UK, the pound, any of the pound pairs is a great pairs to trade. They're going to move in the London session. The pound yen moves as well in the. Let's just have a quick look at let's look at the pound yen. That's quite a good one, because that's always a very volatile. Let's have a look. The daily pip range, well, that's gone down, but look at the number of pips it can move. Huge numbers, but it is very, very volatile. It's increasing slightly. What time? Again, in 2 in the afternoon. Not so much at the fix. Very much so at the London at the open, but also during the Asia session. I'm not surprised, because it's got a yen in the pair. And the days, well, Tuesday seems to be a good day, Friday seems to be a good day. Let's have a look at the pound, the cable. Here we are. Again, we have the similar profile. What you can do is you pull up a daily chart of the pair, and just look at what was the state of the daily chart when these massive number of pips were being posted at this particular time. Was there a reason for it? I mean, obviously we've had all sorts of things to do with the UK. There's Brexit back on the horizon, so we can expect volatility to pick up for the British pound anyway, but it has fallen, and that tells you it's going to be that bit more difficult to make some pips. But again, look at the hourly volatility. What have we got? Well, we've got 7-8 o'clock, which we should expect, the afternoon session. Great bits of information to have at your fingertips. And then, as I said, when you put it together with our indicators, I think, I know we developed them and there are indicators, but I think they're brilliant. And with the Forex program, I know we have some of our students here and we've had some lovely things said about the program. It really does cover everything you need to know to succeed in this complex market. One other site you might like to consider, this is the old, I don't think it's called Mataf anyway. Well, it is called Mataf. I don't think you are, it's a very good site. You can pick off the ones, very similar sort of information. You just pick out your pair, there it is, and it pulls up the data. And it's also, as David said, it's a brilliant site. There's all sorts of tools on this site, correlation tools. It's the kind of information that you say, well, why do I need all this stuff? You don't need it in the sense that is it going, is it absolutely vital? No, but it will give you an understanding and more confidence in what you're seeing on the chart. VPA reveals the truth behind the price action. This then just contextualizes that everything in terms of, well, am I looking at a busy period or a not busy period? Is it worth my, if you are day trading, you have to be in front of your screen, but you can be a little bit more flexible about it, and it just takes away some of the stress. And as I said, here we are with the cable. Obviously 8 o'clock. You can see the increase in participation from 6 o'clock onwards. There's a little bit of movement, sort of 1-2 o'clock in the afternoon. Then you've got 2 o'clock, 3 o'clock, and this is the fix. And then gradually the the volatility in terms of pip range actually reduces. So that's what I've got to say about that. If you've got any questions on that or anything I've said about our program, anything we said, just put them into the chat box and I will be happy to answer them. I'm just going to pass back to David, as he's got, what have you been looking at? Well, I've been, oh right, he's got some currency futures to do. Okay,